Well, hello, folks. Top Gun here with you, and I got a good one for you tonight. I hope. I don't know. Maybe it's more of a scary one. You guys know I love to flop back and forth between the bull and the bear camp. So yeah, this is just a little market update because really in crypto, not much is happening just yet. I mean, I guess I should talk about Richard Hart has made the update very clear that we're forking the ETH 2.0 census. So we were going to be using the Binance census with the Ethereum coin state or block state, system state, sorry. Um, Configuration of where all the coins are, basically the ledger as it is, put in with a certain type of validators, the computers that control the ledger. So the census is how the computers figure out if the ledger is valid, and the ledger is where everything is. So following so far, when he takes the snapshot, it'll be of the ledger. Now, the fork, a lot of the time programming took interface. It took the AMM bot. It took figuring out the buy pressure into Uniswap version 3. It took figuring out the token scaling for gas efficiency and burn rates. All of that can be implemented pretty quickly on top of this new census. Now that Ethereum is audited to wazoo 3 times, I think. It's pretty good because I don't want malfunctioning. I don't want like the 11 various hacks that have happened this month already. Like what are we, 15, 16 days in? Wow, I can't even name them all the central exchanges that have popped this year, all the hacks. It's been crazy. And my hex, yeah, it's fine. Still ticking along at a 90-ish% discount. 92, 93, 95. One heck of a sale. So I've been accumulating. Just a little bit, sticking my toes in because I've been saying a lot of things on Twitter lately. I've been hanging out there and I've been a little trolly. It's been fun. And these things on Twitter is that the end of the world is the bull's case. Kind of following Michael A. Gayard at this point. Still listening to the Maverick of Wall Street. Like I still am looking at all of these things, but let's look at some of these facts together because, I'm going to give you some financial advice. Never take life too seriously, or you'll never make it out alive. I'm not a financial advisor. Okay, now that we got this out of the way and I have established I have no credibility, let's dive into some numbers. All right. What is this lovely chart here? The S&P 500 index. Top 500 performing companies. So this segment right here, thank you for the constant ads. I need to do the ad block tip that Richard Hart gave out. Yeah, so pulse change should be around the corner. This is going to be interesting, right around possibly the bottom of a bear market. So this is the dot-com boom, crash, really. After a lot of money went into technology and it was all too leveraged up and nobody really had a lot of results, but there were some things that flourished out of it. So when the crash started, hey, look, we're looking at July. Like, yeah, we go into 2000 July and the market starts coming down. And then you notice this thing here, right here in January, a little rally comes down harder. And then we have another huge rally, really. Like, we're looking at 2-year time frames right here. So when we see one of these rallies, that's a couple months worth of uptrend. So even though the whole is downtrend, there are still bull trends because it gets oversold during the crash. And things turn bullish, even though there's no good reason. Kind of like a melt up. And then it comes down, but then it's too bearish and it melts up. It keeps having all of these rallies. Massive, long melt up rallies through the entire crash. And then, when it finally bottoms out, look, we establish a double bottom here. Almost test it for a triple. And then, Oh my. As we're into 2005, 2006. Look at those numbers climbing up after a 50% crash. And then where are we here? Oh, we're approaching 2008. That's right. And what happened here? Crash could arguably that was the peak. Started here, had a rally for 2 weeks. Started here, had a rally for 2 weeks. Started here, had a rally for like a month and some odd. There's still some massive denial rallies that'll fuss through until a bottom is finally achieved by whatever conditions are set, fundamentals or market constraint otherwise, oversold conditions. Kind of crazy how this stuff works. I've had a lot of fun speculating and watching this, and then it takes quite a while for the markets to recover often. But then quantitative easing, and it starts to look like crypto. Whoa, gotta shrink her down. Whoa, she's still going off the screen again. And then we get caught up to now. Well, almost caught up to now. There we go. It looks like I'm going to have to extend some lines, folks? I was only prepared so far into the future. Yeah, so looking now. Oh, had a rally. Had a little rally. Had a rally. How bad is this? Are we done yet? So I've been looking at certain things because there's certain leading indicators and certain lagging indicators. Leading, oil prices. Ooh, big jump up. So I was marking a good long bear trend. I think this line has become irrelevant. This might be a line of support now. We'll see how it goes as the future, if it matters, but I have a funny feeling that we're going to want to look at something a little more like this. Because I was looking at a short-term, pretty much, rise, and we start looking at a longer-term trend. It is a very long-term trend. Okay. That kind of tells me oil still has room to move back up, which means inflation will move up, which means the Fed will want to raise interest rates, which should hike the dollar, which should crash stocks and crypto. But the dollar's been going up so much. This is where the Fed's really in a bind. I've got a new scary one for you folks, because I like to show you copper, to show you that industrially speaking, construction and all this stuff is dropping down for electronics and for house wiring and others. But, what's this? Like, I've been looking, trying to figure out, like, is there an argument? Where's the drop going to happen? I had assumed there was going to be another leg down sooner, so I'm still waiting to see exactly how this plays out. No idea. The tea leaves are not being clear to me because I think it revolves around not the market chart, but the things going on in the world. It's just funny how the two kind of side by side. So the new one for frightening. Are you guys all ready for this? Do you know what the bond market is? I don't really want to explain bonds. You can Google how bonds work. Nah, I'm going to explain it. So the government prints bonds and the Fed prints treasuries, and they exchange the bonds for treasuries, and the treasuries can be deposited in a bank and turned into cash. If I'm not screwing this up completely. I'm so bad with terms. So Google it. Yeah, I could be messing with you. I could be lying to you. Google it. Look up bonds and treasuries. So this way it'll make more sense. Go ahead, pause this video. Go. Do it. Go. I'll wait. All right, now that you're back and you're all caught up on bonds and probably don't care what I have to say, here's the big reveal. Boom. What is this? What is this? Should I zoom this in a little bit clearer for you? How scary and how fast this chart is dropping off. This is the aggregate bond ETF. Basically, a collection of the best performing bonds. How the bond market is doing. So as far as this chart goes back for me, Let's keep zooming out here and see, has it ever even been this low? Once on this chart. Once I get back, they won't get me any further than 2004. So pretty much in the last 20 years, the bond market has tanked this badly once in 2008. And the Fed stepped in with its quantitative easing. And then, oh look, the bond market had some trouble again. Where? Ooh, 2000. Now, why is this bond market such an issue? Well, if the government prints bonds as debt, we'll pay you back later. And the Fed takes these bonds on the condition of the interest rate. Well, when the interest rate's zero, 30 trillion in debt is 30 trillion in debt. When the interest rate goes up, and the debt is more than the GDP. So you can't ever pay off the debt. Really, you need to borrow more debt to pay off the debt, but debt at a more interest rate means way more even debt. And so a compiling debt, in other words, you're telling me the government can't pay its debt. It should be bankrupt. Kinda. That's the whole point of fiat. That's the whole reason I got into crypto. And then, the bond market is tanking. Badly. What happens if the bond market tanks? So, interesting facts. Your local bank is backed by a fractional reserve, 5 or 10%, so probably $5 or $10 billion as opposed to $100 billion holdings. And then it's also backed by these financial reserves, by the Federal Reserve, and by bonds. And the Federal Reserve is backed by bonds. But if all these bonds are worthless, then the banks don't have actually any assets to back the supposed zeros you have in your bank accounts. But this is the system we've been running on for decades. As bad as it all sounds, it works. We just need a better system. This is why I like crypto. Programming better financials. So, it's the end of the world. Oh my god, what do we do? Pack the go bag. Bert Turtle, duck and cover. Why? Because it was the end of the world in 2008. It was the beginning of the end of the world in 2020. So, it's looking like the end of the world now. I mean, maybe it is, but if it is, you think shorting anything will get you any cash? And a fun thing about the market maker, should we look at options market? Part of the reason for these melt-ups. Do you know that more options, call options contracts, are traded than actual stocks? That's right. The market maker does most of the stock trading, and most day trading happens through options markets. So you're betting on the market, basically like betting on a horse race or a dog track. But the fun thing is, the bookie you're betting with has so much money that, wouldn't you know it, these dogs can literally be bought. Money's better than steroids. You can inject these dogs with money and automatically make them win, or you can even suck the money out of them like you're sucking the blood out of them and they lose. So if you're an uber rich market maker and everybody bets to the downside, it's kind of interesting. They call this a gamma squeeze. And so the market maker basically there's bets in both directions. So they'll pick a direction in the morning, say sell off, and then buy up. Because they have to hold these shares in order to pay some of these options if they're holding, not traded off and bought back by the market maker. So if everybody's betting for it to lose and they win, the market maker has to spend hundreds of millions of dollars or billions of dollars paying all these winning bets. Or the market maker spends a few $1,000,000 buying up shares, and then it closes up, and then all the people shorting lose money and the market maker makes money. It couldn't be that rigged, could it? I like crypto. you can at least see what's going on in the blockchain a lot easier. But why don't you watch the option market? There are some unusual whale games, particularly with Tesla, which are enjoyable. But yeah, when you see one heck of an overload of options to one direction, this is where that intraday candle we got on the market. Let's go ahead and look at it in, oh, I don't know, the SPY. We'll have to look at the days. We'll have to look at the days here. Let's zoom in. That big green candle that doesn't look like it belongs in the middle of a market crash. Right there. But that's just a fluke. Wait, that green candle in the NASDAQ? That's just a fluke. Wait, that green candle in the Dow Jones? But isn't that just a fluke? That green candle in Tesla, which they erased. Oh, that's awesome. That green candle in Apple, which is almost erased. Funny enough, Schmuckers. It still had the green candle, but mostly unaffected. Schmuckers. Oh, you guys have been having a great year. A great year. Oh, look, wait, isn't this when the market crash started? Well, yes, it is. Schmuckers don't care. All right, now there's General Mills. They're what's known as recession resistant. That's right. Like I called out Lockheed Martin and Boston Dynamics earlier months ago in videos. So if you are stuck with a 401k and you're not liquidating it, you know, there are places where you didn't have to hemorrhage money. Not financial advice. I get this information from fortune cookies. Actually, I give you the information. I get this from Stoic Finance, Maverick of Wall Street, Michael A. Gaird. They're available on YouTube and Twitter, where I hang out. Yeah, I share my information. So collecting it all, though, I do try to redistribute it in an entertaining way. I have no idea if it's really true, but it's funny how often it seems to be accurate. And it makes a lot of sense. So, yeah, I bought into it, and so far, yeah, the information I'm getting, painting one heck of a picture. And it's made me so, all right, at this point, I was looking back towards 2008 because I'm thinking, yeah, the Fed's going to have to stop with its interest rates because the end of the world's the bull case. I keep jumping around here, but basically, it's not the end of the world. The Fed steps in. Like, there's already talk about creating a new currency, not even the digital currency, just a new financial tool in order to buy up something beyond bonds, treasuries, and dollars, to be able to buy up and prop up the bond market. They play quite the game of Jenga. So this is why, like, if it's not the end of the world, you might as well bet on things recovering because the oligarchy seems to be pretty happy being the top 1%, so they may not want the game to completely end. This is bear market cycles. Everyone gets pessimistic and cycles repeat. There's always, the world keeps spinning. There's always a recovery. And am I saying that's going to happen yet? Like the dot-com was 2 years, yet the 2008 in the markets was a lot shorter, but the actual economy took a long time to retrace the stock market and recover. So, yeah, there are still, like, we can look at, I did some Netflix videos early on talking about the pain. Well, the pain has been hitting the market, and Netflix has been consistently flat. As in, it doesn't care what the rest of the market's doing. It's no longer got any more panic. That already almost happened to it, is what it's almost screaming. Netflix, at this point, has been trading more like crypto. Ethereum's chart has more of a dupe like this. Really, I'm not even kidding. Let's go in and check out Ethereum, USD. Yeah, see? Flat and then back up and maintaining this higher level after the crash is down. Netflix and Ethereum have a lot in common. This, but crypto and stocks, well, yeah, they're kind of. I like crypto more. I like being able to see the blockchain. Oh, by the way, in the new Ethereum, which we're forking and hopefully not going to censor the crap out of because they've been censoring the crap out of blocks. Because, you know, that's how crypto's supposed to be. So you can't actually see what's going on. Wait, huh? Censorship resistant? You know, hey, funny, strange world. Can't wait for Pulse Chain. It could be coming soon. So let's look back to the SPX, because this is where I keep talking about, is it crypto spring? The projects popping around, and I mean, when will the correlation happen? So I want to switch back to the weeks because I want 2008. Oops. Well, there's 2008 down here. Wow, the SPX is a fickle one. But you can see how fast the recovery was on this, even like with the 2008, unlike the 2000.com crash. So the question is basically, if everything is this unstable, and the Fed's got to actually change its tune, not just yet, but soon, what's that going to look like? How quickly will things take off? And if crypto is uncorrelating or decorrelating, and we do get recovery news like that, how soon will crypto spring happen? Because I'm looking at Bitcoin. Oof, yeah, it's not fun unless we look at it in log, but then my lines don't mean the same, at least not my angle ones. So looking at, so when we go next bull run, log will make more sense, but we want the days here because it has respected this trend all year. All year it's respected it. And it's even formed this little one, and then it's basically right there at the gates, tapping at both of them. And this is where 11K and pray comes into the equation on this trend. Because I believe in here is our landing zone. Somewhere in here is hopefully the Bitcoin bottom. But because we're getting so close to a possible bottom, that's right near the end of the year, like what if it comes down a little bit and fools us out and then dips down? Because it's been in, and when I was looking at some earlier charts, it looked like March could be the turnaround. It wasn't the SPX, it was something else I was looking at, but somewhere between now and March, the next 2 weeks to the next 4 months. Now, the interesting thing about the bottoms when they happen is we should maybe switch to log, or we're going to have to do a lot of zooming in here. Because when the bottoms do happen, all of a sudden they pick up and take off. So here's, alright, top in Bitcoin. Bottom finally comes out. Trades up, still has to touch off it again a year later, and then it just takes off all of a sudden. And do you really want to miss the takeoff? Because this stuff is so volatile. Like, if you're close enough to the bottom, how much lower can it go? Like, what percentage is it dropping that you're gonna make extra on your investment that's worth missing out on all the gains entirely? So trying to time the bottom precisely sucks. But if you know approximately when the bottom is, like, hey, it's in the next few months. So would now till March be a great time for me to DCA $25 a week so that I'm catching the bottom, because it's already pretty low. It is all probably going to go higher than this in the next few years. My time horizons are long. I'm not eager about day trading. I want to buy assets to hold, which is why I've been enjoying this. Should be careful jumping around all these charts. It gets confusing for my poor computer. All these different time horizons. Alright, yeah. This is one heck of a come by me flopping on the bottom past all the points of resistance. We ain't going lower. I think we've established this green line as the new bottom. Now, temporary, tradable. Because I still do believe in more pain in Bitcoin. This is the weirdness, though. Like, I really don't know. I'm expecting, like, when everybody thinks they know an unknowable future, that's when you're surprised. I mean, there could be a melt up in the stock markets, which could cause a rally right now in Bitcoin, and we could see some higher highs finally. And the trend is your friend until the end. And I've been saying, when is the end of the trend? Will the trend hold out here and shove it down, or will it finally break? Because when I talk about crypto spring, I'm looking at the weight token, the free claim that I got for sacrificing for so many projects. I might have gotten a lot of weight. And I might have claimed it recently based on updates that we could get it soon. And I still haven't even dumped it. And look at this. It's other people are not dumping it. Like, oh, now they have been for quite a while. No illusions here. It surged up before, but now it's peeking its head up again after a long downtrend correction. Interesting. Interesting. Might not be worth anything really, but I like these free claims. They keep me amused, especially looking at Pulse D, because some other people were like, oh, well, I'm just going to sell that for Hedron. Well, funny, I hold both, and they go at different times. This has been recovering very nicely, 641, while Hedron has not. I don't trade between the two of them. I just own both because one was a free claim and the other was a free claim. Funny how that works. Well, no, this one I haven't cashed out. My stakes aren't over. So I actually did buy some. And as I constantly gloat during the first bottom. And then you can see how this is actually looking to correct to go to an upward again, too. So these little alt projects, little other coins surrounding the Pulse Chain ecosystem are all peaking like, ooh, our long-standing bear market, how long this altcoin is 1 year old. And it has had a half year bear market, April till now, more than a half year bearishness, but she's still peeking out. This is actually a pretty healthy, sexy chart when you think about it. As it takes forever to read. There we go. Redraw on my computer. Yeah, this is a pretty sexy chart. A little up, little up, little up. Keeps making. Each low is higher than the last low. And I'm pretty sure this is its W, like Hex used to make. You know, altcoin spring. Is it here? I don't know. But I'm not day trading these. I love watching them, but they turn on a dime. Like, too volatile to predict. The volume trading shifts around all the time. Like, so yeah, Pulse D, funny enough, actually has pretty decent liquidity for a meme coin. I think that's what keeps it trading along with them working on some other things. I wouldn't buy it or recommend a meme coin, but they're trying to turn it into a proof of work mining for another coin. So they're going to have a 3 token system. Right on, they're making a cooler little toy. Maybe it'll get more engagement. Maybe it is actually popular. All I know is I got a lot of FUD about the contract robbing people, so I read the contract and I did an episode on that. It wasn't robbing people. That was lies. So I did my free claim because it was safe. And then I sat there and watched free money grow because it was safe. So I enjoy the popcorn and do that because I don't buy any of it. I keep DCing into what I like. And what I like is Hex. And yes, I do obviously like another because I know the future for this project. They haven't massively pumped or promoted. There's hardly any liquidity, 15K. That's not advisable for trading in. That would be screaming of a scam project. Don't touch it with a 10-foot pole. Except it's had a year-long sexy chart, which means it hasn't had a listing on a major site and major pump and dump and all the exchanges jumping in, kind of like Hex. It's been a natural growth chart. And it's got 1,000 holders. Not quite, 928. I think that's cool. This should also say 17 trillion ish, because 403 are in the burn address, never to be seen again from. But people have been accumulating in it, and I find it interesting to see where they're going. Their project was supposed to be a Pulse native wallet. I got very much associated with the project. I like KG. I like where they're head at, what they're doing. And it's kind of evolved. So, hey, like, this is worth. They're going to launch this on Ethereum and on Pulse Chain. And it's going to get bought up with the WD token. I love the mechanics that they're planning for this. That's pretty cool. I mean, could it still flop? Might nobody use the wallet? Yeah. Is this completely risky? Because there's very little liquidity. There's no guarantees. There's no financial security to this. Correct. I am taking risk with my money because I do believe in the team in the future, and that's my personal preference. I tell you about my decisions, what I'm doing with my money. I don't even recommend you do it. That's why I have a song that goes, "This is how I'm going to burn my money." um, so yeah, Hex, I like. It's a lot more reliable, trusty. Had plenty of perfect uptime, and got a new project launching for it soon, where we're going to get a free copy of this and better fees to play around with. I think that's great. So, what will happen with the bond market looking like it's looking like? Will they step in? How soon to correct that? What impact will it have on the rest of markets? Will it cost a risk on for crypto? Because there's arguments that, okay, if they step in and do something for the bond market, commodities may take off. And if Bitcoin is considered a commodity, maybe it will. But if it's considered a risk on asset like tech, maybe it won't. Because the stock market won't recover as quickly as commodities might, or futures, more specifically, when it comes to the Fed stepping in and the dollar starting to drop. So we'll see what's going on, because the Bank of England is also fighting the Fed on the dollar. There's so many opposing forces right now that it really is chaos. But these things do somehow tend to get sorted out, because it's been chaos before. And Warren Buffett bought at the bottom of the market thanks to the chaos and never regretted it. We're pretty close to that bottom. I'm pretty sure that the numbers we see now on some assets, we're going to see very soon, even if they dip lower. Other things have a lot more pain to happen. It all depends on how many cards are blowing them up. Because another thing I don't talk about is the car bubble. Yeah, cars. Used cars, new cars, prices going through. Why is this such a bad thing? Well, all the risky mortgage crap that happened with houses in 2008, yeah, that's been going on with cars. But even worse is cars tend to actually lose their value faster than the debt, and especially with the interest rates going up, and cars lose their value faster than houses traditionally. So when the bubble's popping, that really sets in. How bad is that domino reach going to explode when the car bubble really starts to unwind? How far can all this go? Where will the step in come? I don't know. But it's getting closer. Because I know I was very bullish for a while, and then I shut up on being bullish and started being realistic. This is what's going on. I'm still going after these dips. And I'm telling you, I'm feeling like this is a pretty good dip, like before when I called it out, the June bottom. Because we might see a winter melt up going into Christmas, because news that the Fed going to work on, like, who knows what the irrationality is, but when you look at the RSI conditions, like these fundamentals, which fundamentals are you talking about? So let's go in, look at the NASDAQ, and go ahead and look at the weekly. That is hugely oversold, just like it was before the last rally. Same with the SPY. Same with the SPX. Now it can stay oversold for a while. It really can. Just because it's dipped this low doesn't mean it can't stay this low. You see right here, there's a little bridge where it lasts for like a month. Yet while it's staying low, the price wasn't dropping. It's funny how that stuff works. not dropping as much compared to the rest. So yeah, looking again, Tesla. Ooh, that's not even bottomed out yet on the RSI. Poor Tesla. So could we see more pain this week? Like a lot coming in. Yeah. But I mean, as opposed to buying up here, this I felt like was catching a falling knife. Down here might be catching a falling knife. Down here, it's really, I doubt as much catching a falling knife. If it for any reason gets down here, just dive right in on it. If it gets below the 50% correction, just dive in on it. That's my thinking. Not financial advice. That's what I'm saving up, and I'm thinking. So this is where, like, yeah, I'm tiptoeing in, and I make this joke: tiptoes, then ankles, then knees deep, and then waist deep. Oh no, not ready for waist deep. As these signals get, how far will I dive into my DCA? When's it finally getting time to start scooping things up? I'm keeping my eye on the market. It's getting closer, and I also work a day job. I won't necessarily be able to shout it out to you. So this is why I make point of all the things that I am watching, so that you can watch them too, if you like. If you want to make your own assertions, if you want to look at what these patterns are and come to your own conclusions, possibly research some of the names I give you, some of the facts I give you, and make a decision. Hey, I hope I have helped you. If you're just doing what I'm doing, well, I'm not going to give you every one of my calls, so you're likely to get wrecked. There was a great meme on this, and it's got the guys like, it's almost like a Simon Says or Follow the Leader. Tap tap, so the other guy goes tap tap, and then it's like pat pat, and the other guy goes pat pat. And then the guy's like, and so as the other guy goes, the guy's ready to go. Ugh! And yeah, that's what happens with the market. You're copying somebody's moves, and then suddenly they turn when you're not expecting it, and wham, you get taken for trying to trace them. I don't know enough about this market to go in and trade it. I know it's getting more dangerous near the bottom here. Like near this top, I'm like, oh yeah, short. Now crazy volatility can start ensuing through this whole range. Not sure how this will play out between the markets and crypto. But so far, the crypto market's been pretty consistent with its 4-year cycles. And traditionally speaking, it's coming to the end of its bear market pretty soon. And it does seem to be crypto spring with all the scams propping up, and with some of the alt scene coins just propping a little bit of volume and some maybe hope. So could there be another slap in the face, like stop it? Could this be a false spring? Another frost is in the air, another bout of winter, another 6 weeks of winter? Maybe. Maybe I'm getting my hopes up a little too early. But when you're DCAing in, it takes a lot of the stress out of it, doesn't it? At least it does for me. So, yeah, I held off for several months. I've been watching a lot of the market play out, and crypto, because the market can move differently than crypto. Crypto has had its max pain, much like Netflix. So things that will recover sooner are things that have already shaken out most of the weak hands, paper hands. So as the rest of the market starts to crash and people are fleeing to safe places to throw their money, this is why, some of these alt projects that have taken most of the pain might keep their worth, because the money's coming in there, running from other places that are now crashing. It's always a game of musical chairs and hopscotch, jumping around. So follow the money, follow the money, follow the queen, follow the queen. I do find cons interesting, and financial markets are one of the best. Anyways, I hope you guys have found this entertaining. My rant about the markets, what I've been watching for, what I'm waiting for, what I want to see. I want to still see some more pain. I'm not ready to dive in with both my head first, both my legs, get all the way in there. No. But I'm sticking my toes in some little things, aka hacks and IM. I'm DCAing those. Those are my two things. This is my riskier option with low liquidity, because I believe in the future of the project, not because I believe in what's going on right now with the project. Well, I mean, I do. Like, their wallet bait is coming out. But the buy and burn. And Hex. Gotta love me some Hex. Like, look at that. Drive it to zero. Well, you missed your target. Target was follow the blue line. Follow the blue line. Stay under the blue line if you're going to go to zero. You got to stay under the blue line if you're going to go to zero. It's... You drew outside the coloring book. That means you're not going to zero. Well, if you're not going to zero, are you going to stay the same price for the rest of eternity? I'm glad I'm DCAing in. Just a little bit here and there. Because, yeah, maybe we do hit one of these lower price targets and then have to double bottom it. And we don't get to climb out until May. Who knows? But yeah, on this timeline, like this line right here is January already. 2 months? 4 months? We've already waited so long. Somewhere in here. And it's not going to explode off, but it's going to start ticking up, up. Ticking up. Who knows how fast it'll go? Maybe it will go straight up vertical because some insane oil czar will go, this is great. Whoa, I'm going to buy $500 million worth. Boom. Liquidity dried up on the hex side. Price through the roof. You never know what'll happen. You'll never know what happened. That's where I joke. I'm like, I am literally right now, the liquidity so low, 15K. If somebody watching my show just for fun wanted to toy with and give a Christmas to a bunch of little investors, 15 grand in this liquidity pool right now would double the liquidity on the right side. It would buy you 100 billion. I am. And it would quadruple the price for everyone else involved. They'd all start popping corks. The price would just whoop right up to this 4, like one straight wick up. 15 grand buy, that's all it would take. You mean the size of buys that happen regularly in other crypto exchanges easily? Yeah. That's why this is so volatile. They won't come in and put their money because other little vultures like me might pluck away at it. But it's... Oh, look, that little bud past the downtrend. This is why I'm like, could it be spring? Could it be spring? Yeah, maybe there's some more pain, but finally, the end is in sight. The frost, the thaw is coming. The spring is in the air. Yeah, maybe there'll be another frost. Hey, I'm a little early. That's why I got my groundhog jokes, checking for a shadow. But I don't want to miss it in case the Fed just does something really crazy. And we're like, no way they could. And like, yeah, they did. And wow, prices of assets just skyrocketed on that news, including crypto. And oh, wow, 30K Bitcoin, 3 grand Ethereum, 20 cent hex. And we all missed the bottom because we're like, 3 cents, that's not enough. I want 1.5. Well, now it's 20. It was 1.5 for 5 minutes. Sucker. Like, I don't want that to be my story. I already got $50 for 100 Bitcoin as a story. 3 cents? That seems like a good price for me to start a little DCA in, even if it's going to go to a cent. That's even better. And if it doesn't go to a cent, and it doesn't go lower than 3 cents, because it did double bottom, because it did get past the blue line and drew outside the coloring book, also not losing any sleep at night. That's me. That's what I'm doing. Also, though, I gotta say, I got a free NFT. I gotta watch it, see if the education is good, and if it is, I will gladly say its name on here and tell people to go spend the $40 for it, because it'll probably teach you more than I can. Because if I learn stuff off it, it definitely can teach you more than I can. So anyways, I hope you guys enjoy my little weekend update. Touch on this week tonight before you get into another week of probably degen trading, because you're probably degenerates, but I still love you. You should have a better thesis and DCA into some good projects like, hey, I got a risky one. I got a good one. I've got my money sitting waiting in sacrifices for Paul's chain to launch. I'm happy. I'm happily diversified. I like looking at these things, speculating. If I specifically get a free claim targeted to my hex stakes or my pulse X holdings, yes, I might claim it after I check the contract to make sure it's safe and worth the gas money. And I think my next episode, I am going to do one possibly on how much I hate reflection tokens. Just any kind, any variety. There's no fixing them. There really isn't any fixing them. They'll just fail. The best you can do is make them fail slower. This is a very strong feeling I have about reflection tokens. It goes out to someone I know. Um, anyways, yeah. Thanks for tuning in. Sorry for keeping you guys a little astray for 10 days. It's been a lot of work, and I have another long week. So I'm really sorry if you don't hear from me until next weekend. If I have any free time, I'll do my best to get another video in. Until then, I'll be trolling Twitter. Don't follow me, don't subscribe. I'm almost at 2,000 followers. It's freaking me out. And yeah, Twitter. Yeah, I like hanging out there so I can troll people. It's kind of fun. It's low stress. I can put my thoughts into a little blurb while I'm having a smoke break. Not the big prep of having a video and going through charts. So yeah, I spend time there if I can't get away from work. But you can find me somewhere. I'm trying not to abandon the community. Between Twitter Spaces and YouTube videos, I'm getting out there and I'm trying to talk on different topics. I had to be encouraged to use multiple platforms, so I encourage you guys to do it too. Check my description for the link if you still won't go away and unfollow and unsubscribe and you're that dedicated a stalker. Fine, I'll get the restraining orders ready, but until then, yeah, the link's in the description. Go ahead, you can click it. You can find some links for useful tools or for my Twitter and Telegram. You guys can find me. I'm not disappeared even if I don't make a video for 10 days. Alright? Till next time, stay frosty.